It's been a couple of months since the last video. A lot has changed. We've had some decent declines of late. We've had obviously some new entrants into the space like Elon Musk, and there's been quite a bit of hype around the action of late. So there's a little bit here to cover, but at the same time, I hope, and this sounds counterintuitive, but I hope for the longer term followers of this journey that you don't necessarily find out anything new, because the entire strategy has been based on the idea that investing is all about having conviction, getting in early, and staying the course, and ignoring the noise around the cycle. And we've certainly had a lot of noise, and a lot of what I'm going to talk about today I think fits into that category. So I hope by this point in the journey, 2+ years in, that you do see a lot of what's going on in the space as just noise on the way towards our goal. And that goal has been clearly stated from the beginning, and I still feel that we're on that path. So today in this video, I'm going to cover, as I always do, where we stand in the 4-year cycle, where we are today, where I think we're going, what I think may have changed since some of the earlier videos. Then, of course, as I always do as well, I just want to talk a little bit more about the emotional side, the psychology side, because that's where the game is going to be won or lost. It's going to be won or lost in your own head, how you interpret the news cycle, the FUD, and everything else that's going on in relation to your own position. That's really where the battle is, and that's where the battle needs to be won. I'm also going to talk about the super or hype cycle that all of a sudden is the latest and hottest craze in the Bitcoin space. I'm going to talk about the institutional phase of this 4-year cycle. I'm also going to touch on very briefly about, just in general, other risks like the COVID reemergence, or the bond rates that are going up, the US dollar supposedly crashing, inflation, stock market crash, and so on. I'm going to touch on getting out and selling, because we are, I believe, getting closer at least to that point, or potentially to that point. And this is a question that keeps coming up, so this is something I need to address. And then I'll just very briefly touch on what I think happens after this 4-year cycle. It is too early, in my opinion, to begin worrying about the next cycle. We need to worry about this cycle, but of course, I'll just touch on that real briefly, and I'll close with some final thoughts. That's the agenda for today, so let's get stuck into it. So the last video was released in early January, when Bitcoin was on this really significant tear, heading up towards 32, 33,000 or so, and everybody was really excited. And one thing I recall a lot of people telling me was that we're never going to see another 30% decline, because I've always worried, or warned at least, that 30% declines will come. It's in Bitcoin's volatility profile, and one was going to come, and I was certain of that. And so many people essentially replied, whether in comments on the video or on Twitter, that you're crazy. Institutions will never allow Bitcoin to drop by 30%. They'll just take it. They'll gobble it up. That was the narrative that I heard over and over again. And of course, I knew that wasn't going to be the case, and it wasn't the case. We had a 30% decline here in early January, back into mid to late January, and that shook out quite a bit of the leverage players and folks who had gone in on margin, for example, and some of the derivatives, futures, and so on. And then we had this continuation high, and then we've had this other almost 30% pullback. So we've had almost two 30% pullbacks in just 2 months. And the point I'm mentioning this for is that volatility will only increase as we get higher. And that is part and parcel with the expectations that we need to have, and how we approach and position ourselves on the way towards our eventual goal. For most of you by now, I hope 30% declines don't mean anything to you and don't impact you at all. But it still becomes difficult when you see everybody supposedly making a lot of money, and you're sitting in sort of a comfortable hodl position there is this tendency that you need to add to your position, that you've missed a lot of the massive gains perhaps, and that you need to add to your position. And that's typically, those thoughts typically come in at the tail end of a big move. And when you do succumb to those thoughts and you add at the wrong times in a bull market, you are susceptible to these big pullbacks that end up shaking you out, and you end up selling some of that position or that extra position that you added, and in turn essentially raising your overall price on your portfolio. I did say in a video a couple of times, actually, in some videos in the past, when Bitcoin was at the $4,000 and $6,000 and $8,000 range, that in the future, when we get up into that bull phase, that we're going to see $10,000 declines in a day in Bitcoin, and we're going to see $10,000 rallies in Bitcoin in one day. And it seemed almost crazy at that point that was possibly going to happen, and it's happened already. We had a $10,000 day here not long ago, a couple of weeks back, and I think a lot of people panicked, and a lot of people sold, a lot of people were hurt because of this, and some of the altcoins that people got themselves into went down 40 and 50%. Now some of them have recovered, but if you were in with too much of a position, then those types of declines really did hurt and possibly threw you off your position. So we need to be mindful that going forward, as Bitcoin continues on in this 4-year cycle, that we are going to see more and more of these $10,000 declines. And when we get up to the $100,000, $120,000, and $150,000 price range, we may even end up seeing $15,000 declines and $20,000 daily declines. So again, it's all about the mindset that we take into this, and being prepared for such events to happen, and to understand that they are, for the most part, normal in a bull market of this size. That that will prepare us for being able to comfortably accept and ride that position. So people got worried in these two moves, but again, if you're worried about these daily moves or these weekly moves of 20 and 30%, you're looking at this from the wrong lens. You're looking at this from the wrong time frame, and time frames are very, very important in investing. When your horizon is a 2-year investment or a 3 or 4-year investment, then the daily chart, the 4-hour chart, even the weekly chart to some extent, is not something you should ever look at. What you should always be looking at is a time frame that complements the time frame of the investment itself. And when you do that, it allows you to take out a lot of the fear that you see from a day-to-day swing and a week-to-week swing. For example, if I were to go to a monthly chart and look at this chart right here, where is the 30% decline that would scare you in this? Here they are here, a couple of the wicks, right? January and February, a couple of wicks, but all I see is all-time highs. I see monthly candle after monthly candle after monthly candle making a new high and an all-time high. I see only green candles. I see 5 straight green candles. I see green candles above the monthly Bollinger Bands. So when I look at it from this lens only, from this time frame, I have no reason to be scared. I have no reason to panic, especially if you followed this and you got in here in December of 2018. Okay, we are sitting here on a position that is up 1,330%. Okay, so again, look at it from glass half full, not half empty. Yes, we do have 20-30% pullbacks, but when you look at it from your portfolio standpoint, the 4-year journey model portfolio that started with 100,000 investment and made its way up to something like 1.7 million in terms of value. And then during that decline a few weeks back, it dropped like $300,000. Now, if I look at that and say I'm down, I lost 300,000, then I put myself in a mental position where I can panic and sell and get worried I'm going to lose more. Whereas if I continuously just say to myself, yeah, the portfolio is up 1.4 million on 100,000. I'm doing well, and I'm looking at this chart on the monthly. I don't see any reason to panic. It's not even a red candle. I can then just essentially brush it off. I can move on and not panic and not fear that I'm going to lose my position. It's really the fear of losing a big open profit that haunts a lot of investors. It's not the fear of losing necessarily. It's amazing that investors can sit with a losing position for much, much longer than they can in holding a big open profit position, because there's this tendency in the mind that we need to realize that profit, that the profit's there on paper and it's not yours. So you need to have an action to close that position to realize that profit. And that's a very strong urge that we have, and that's why they say it's very difficult to ride a bull market. It's easier to ride a losing position in a bear market, because we're using the same psychology. If you are in a big losing position, it's not realized until you sell it. So you don't want to realize a losing position because it makes it real when you close that position. So you're willing to hold it even if it's down 60, 70, 80%, because your mind plays those tricks on you that you haven't lost yet because you haven't closed, and there's a chance that it'll recover. On the flip side, here you are sitting with 1,300% profit, but you're worried that it's gonna evaporate on you. It's gonna be lost, and that's where people still make money in the bull market. But when they look back at the end of the cycle, and they look back and they see, an asset like Bitcoin, for example, that may have gone from 3,400 to 250,000. And they look and they say, well, I made some money, but then they realize how much they really could have made if they held on. So again, this goes back to the goal. This goes back to what are we in this for? And when I showed some videos from December of 2018, from the original video, I had a path and a plan that I was following. And I knew it wasn't going to follow perfectly. And I knew it was just a guide. It was a possibility. And in investing, I was prepared for the worst, right? And that's why my position size was what it was. And it wasn't all in. It was a good-sized, reasonable position that acknowledged that there was risk. There's risk in any investment. But at the same time, I said to myself, I'm not going to give up on this possibility. From what I see from prior cycles, from what I see from the potential, that's where I think Bitcoin's going to go. And I'm making a commitment from the beginning that I want to see Bitcoin get up to that level. And if it does get up to that level, I don't want to have regrets. I don't want to look back in a year or two and say, I was in from the beginning. I saw the potential for Bitcoin to get to 200, 250, 300,000 in that cycle. And I was there. I was positioned. But somehow I fell off. Because if you fall off in a bull market, if you try to time the daily and the weekly, thinking that you can get a little more Bitcoin or you can escape a 30% decline, the various or multiple 30% declines that you will see on the way up, then I can assure you, you may get lucky once or even twice, but at some point, the bull market is going to trap you out. It's going to rally so sharply that you won't know, or you won't be able to buy back at a much higher price, and it'll leave you behind, and you'll be sitting back in a year or two and saying, wow, did I miss out on an opportunity? So the whole goal of this is to have a position that is not so extreme, that is not so large, that is not a position that keeps you up all night and makes you, dream about this and check prices at 2 o'clock in the morning and 6 o'clock in the morning when you wake up. A position that, yes, is obviously meaningful and life-changing and impactful, but at the same time, it's got to be something you can handle. You need to be able to handle the gains, the open profit that you have, so you can get to the point where you can realize that gain and have a life-changing event. As I said before, if you need to take a little off the table on the way up I took a little bit off at 28,000. Some people said, you're silly. It's going so much higher. Yeah, I know it's going so much higher. That's the whole point. The whole point is that I want to take some off the table, cover my initial investment, so I don't feel as if I need to sell at the wrong time in the future. It's a planned event. So planned events as part of the strategy to getting towards 250 or 300,000 are perfectly fine because they are on your terms. Every time you make an investment decision on your own terms, you're winning. Anytime you make an investment decision that wasn't planned, that was in response to action, market action at the time, is an event or is an action that is most likely not going to benefit you. That is not on your terms and in your strategy, fitting your plan. And looking back, most of the times that happens, it doesn't serve you well. So that's something I think that's very important here from a psychology standpoint. This is not a game of being overly technical, okay? This is a simple strategy. 4-year cycle low, we declined 85%. Prior cycles tell us that we're going to go and make an all-time high and then possibly do a 10x or 20x or 30x from the other all-time high. I'm not discovering anything that somebody else hasn't before, but what I'm doing possibly differently to that is acknowledging the possibility, putting myself in position, and essentially hunkering down and having a confident mindset to be able to realize that gain. The absolute last thing I don't want is to be able to see Bitcoin get to 250,000, 300,000 and not have the position I said I was going to have, and to be able to predict or see the possibility of Bitcoin getting to a certain point and not being a part of it. That would eat you up. It would tear you apart. I'm almost more content with, for whatever reason, Bitcoin topping out early, like 60, 70, 80,000, and reversing into a bear market for 2 years, and maybe getting out back down towards 20,000 or 25,000, right? That is a possibility that I don't see occurring, but it's always a possibility. And if that were to happen and you still make some money, that's fine. That's just what the market gives you. That's what you take. You just don't want to be in a position that you predicted or you saw the possibility, you positioned for it, and you weren't there to benefit from it. So the journey has been all about staying strong and talking about your mindset. So I've kind of answered the second part of the agenda right here, the mindset piece first. From a 4-year journey standpoint, nothing has changed. We are at 50,000 right here today. So the point of showing you those prior videos is just to illustrate that was the plan from the beginning, and I want to stick to my plan. And my plan for me is going pretty much to script. There's obviously surprises along the way, and we knew there would be. There was a big surprise early in 2019. It rallied sharply. We had the coronavirus crash. We had one of the biggest, fastest declines in Bitcoin's 10-year history. We've had a big sort of quadrupling here over the last 3 or 4 months. Those surprises will continue. Nobody can predict the price from a day-to-day, week-to-week, month-to-month basis. What we're trying to say simply is big low here in December 2018. A big high is due at some point towards the end of this year. Okay, and then I believe a big 4-year cycle low is due at the end of 2022. Where the price tops in that cycle is open. Okay, it's up to the market, it's up to the participants as to where and how high they push this market. I'm not trying to predict that top. I'm trying to predict as best as I can when the time comes, if I feel the market has blown off to a point where it's going to top in and around the time frame I expect for a top to occur, which is towards the end of this year. That's my only goal. I'm open to the possibility that we top before sort of the $150,000 range. I'm also open to the possibility that we surge to 300, 350, or 400 in this cycle. It's a possibility. It doesn't negate a 4-year cycle theory. The cycle theory is purely based on the declining phases of a cycle. The declining phases, or the lows of it, is what marks the beginning and the end of a given 4-year cycle. How the cycle rises in that period, or in that cycle, determines its translation, whether or not it's going to be a rising cycle or a flat or a declining cycle. And we'll get into that a little later on. So that's a good segue here into sort of the next question that we have on the agenda, on whether or not this is a super or hype cycle that we're about to begin on. Yeah, I find this idea of the hype or super cycle very interesting, not so much from what it potentially can give us from a price standpoint, but from a psychology standpoint. If we recall, all of last year, pretty much the entire 2020, when I asked people on social media for questions or what they want answered, I probably received 30 to 40% of the questions were, are we in a lengthening cycle? Are we in a lengthening cycle? Is the 4-year cycle incorrect? And it got tiring to hear that, to be honest with you. And I didn't get a single one this time. Not a single question from hundreds of replies. Are we in lengthening cycles? It's almost like that whole idea has disappeared. And all of a sudden, what I see is 30 to 40% of the questions are now, are we in a super cycle? Are we in a hype cycle? Are we going straight up to $400, $500, $1 million? So, it's just interesting how the narratives quickly change based on the market. It just tells me that everybody is so biased in so many different ways, and they want to get behind a narrative. They want to sort of almost justify their position, and they develop bias and narratives. And in the end, for me, it's possible, is always my answer. I said the same thing about kind of the idea of a lengthening cycle, where the lengthening cycle idea, I basically said, well, we can easily get a peak, a 4-year cycle low, and then a left translated peak again. And that would be, for some, considered a lengthening cycle. This would be a blow-off top here in late December of 2023 or maybe 2024. And that, when you zoom out, would look like a major top. But for me, in a 4-year cycles, it still would fit that profile. And the same kind of thing can be said about a hype cycle or a super cycle. Does or could Bitcoin just rally and get up to this 400, 500? Yeah, of course it could. It's possible. And I hope to have a good size position still in play, because I'm not targeting a certain number for my sales in this cycle. I'm targeting what I hope will be a speculative blow-off top that I can hope to identify as close as possible to real time as possible. And whether that's 200 or 250 or 350 or 450, I think some of the same characteristics of a bull market blow-off top will appear and exist. So can we get, just to answer the question, can we get a hype cycle? Yeah, we can. The last few peaks were 10x or 20x above the prior high. Even a 20x from the 20,000 high gets us to 400. That would still fit kind of the profile. So we can get to that point. We can get to that point even this year. We can get to that point maybe early next year. My point, though, is that the 4-year cycle, meaning a meaningful corrective sentiment squashing, swinging that pendulum back to the extreme bearish side, will happen no matter what. We will get a savage decline, a significant bear market decline after the peak of this cycle. And whether that cycle peaks at 150, at 200, or 500, whatever that number is, we will get a bear market, in my opinion. We will get a decline of easily 50%, but I think it'll be more like 70% from the peak to the trough. and I think that's going to be unavoidable. So my answer to the super cycle, the hype cycle, is that given the level of interest and the type of player that we have in the market today, the type of capital that we have potentially continuing to flow in, yes, we certainly could get to that point. I mean, we're already at 50,000. Another 10x from here, and 10x can be done relatively quickly in this space, is 500,000. So it's all open. I'm not, I try not to be rigid in my analysis and my expectations. Again, I'm focusing on time, and I think this cycle peaks towards the end of this year. There's plenty of time left for the market to do something absolutely crazy. But again, whether it's a super cycle, a lengthening cycle, whatever you want, it still fits what I believe could be or would be a 4-year cycle low in the future. So let's talk about this institutional phase now. Everyone's talking about the game's changed. It's institutions. Did the 4-year cycle predict or think about that? Well, in fact, if you go back to some of the earlier videos, it's exactly what I talked about. I always talked about the next phase being an institutional phase. The next phase had to be an institutional phase because we were now getting into serious market caps. Once you get above sort of that $100 billion cap to $200 billion, you can't sustain that with mom and pop and enthusiasts and so on. You need some more serious capital. You need some more widespread attention, and that's what we're seeing. And I think the last bull market was the technical enabler of the onboarding of institutional funds and flows through institutional platforms and custody platforms and trusts, for example, and some regulation. It's enabled the onboarding of institutional investors into this space, and we're seeing that here today with Tesla buying, obviously MicroStrategy, Grayscale, and there's more to come, and there will be way more to come, and that's what fuels and drives a bull market. That is the narrative of this 4-year cycle. Every 4-year cycle has a narrative, and I take my hats off to these folks, Elon and Saylor, for example, and some of these institutional folks dipping in. It's brave of them to take that first leap. It's easier for us as individual investors to do that, but they are they are stewards of capital. They have fiduciary responsibilities to shareholders, for example, and to put that money or that capital at risk in something like Bitcoin does take it does take being brave to be able to do that. So I take my hat off to them, but I don't worship them. I think there is too much of that really going on in this space, and it's a little cringe like for my liking. I think some of them have the right intentions, and I definitely believe Saylor has all the right intentions, but I will warn you, be careful with what you wish for when it comes to the institutional side. Most of that money, and I know a lot of the people behind it, not necessarily all personally, but I know the space, they are in it for the profit and the speculation, just like most of you are as well. We are, in some ways, smarter than that money, right? We got in 10x lower than they did, and they could have got in at that point, and they didn't. They were waiting for a lot of the confirmation, and they were waiting for somebody else to make that move. So in many ways, and I've said this before as well, institutional are like sheep themselves. They follow each other, and when somebody starts making a lot of money in the space, they feel compelled to follow. They are no smarter than us. They just have the connections, and they have the capital, and they have the whereabouts to be able to make that move. But we did it before them this time. But don't be mistaken. They don't have the same views of Bitcoin that most of you folks do, who believe in it more from a grassroots standpoint, where you won't sell a lot of your position. You may hodl for years and decades. Institutional does not have that same belief. I can guarantee you of that. Again, there are exceptions, Saylor, for example, and others. But a lot of this money, a lot of this big money, is in it for the gain, and once they receive a 2x, 3x, 4x, or 5x return, they're going to start looking for the exits. So if you believe, again, going back to questions I get a lot, which is, will we get a big decline for the next 4-year cycle? You bet we will. I guarantee you we will. And I don't use that word often, but we will see at the top of this cycle, we will see a sell-off like you won't believe, like the prior sell-off and the sell-offs in the past, when people start heading for the exits and the panic button is hit and the party is over and it's time to go home. Institutional has no allegiance. They have allegiance only to their capital. They worship their capital. They don't worship Bitcoin like some of you do. They worship their dollars. And they will head for the exit, and they will create a tidal wave of supply in the market that gets dumped, and you will see that as the start of a sell-off into the next 4-year cycle low. And it could be quick. It can be relatively quick, at least from a longer time frame. It could just be a 6-month decline. Again, it's difficult to predict some of these things, but from a price standpoint, you will see a major correction from the institutional move. So again, institutional was always inevitable, right? Anything that's going to grow from a network standpoint and grow from a market cap standpoint needs broader and deeper adoption. It's the only way Bitcoin will grow. So we have to, I guess, embrace it. We just have to make sure we don't sell our soul at the same time with the adoption of this. But getting up to a 1 trillion market cap and then going up to a 4 trillion or 5 trillion market cap it just involves and needs deeper pockets to come into the space to make that happen. But don't think the volatility is going away. When the volatility goes away, or at least becomes more alike, say, gold and some other asset classes, it comes when we at least find some level of intrinsic value in Bitcoin. And whether that's at the 4 trillion or 8 trillion or 12 trillion market cap level, but when things begin to flatten out, and I think that doesn't happen until this sort of 25, 26, 27, 2026, 27 time frame, until that happens, where we find some level where the market kind of settles and finds a price for Bitcoin, that's when the volatility begins to really reduce and shrink. Until that point, especially in this next cycle, expect to see a significant decline. Okay, COVID coming back, bond rates are going up, the US dollar is going to crash, inflation, stagflation, stock market crash. You know what? I don't care. Those to me can be short-term drivers, like COVID last year. That was a liquidity event that spilled over into crypto and Bitcoin, and there still always are risks on the shorter time frames. But I think, and I've said this before, Bitcoin is in a bubble, and not the traditional sense of a price bubble. And of course, it is in one of those as well. It will be eventually. It's in a bubble in terms of its finding its true intrinsic value. It is rising versus the USD. Even if the USD were to rise, it's still going to rise faster. It's rising no matter what bond yields are doing. It's attracting new flows of capital. So it's in a phase of its evolution where it's still discovering price. And that will not be disrupted. It can be altered temporarily, short term, again, like we saw last year. But in the end, once you start to add way more correlations to an asset and start to try and sort of predict what other influences in other asset classes may have on Bitcoin, I think you just run into the risk of overcomplicating what it really is, a fairly simple idea that Bitcoin is very, very young, extremely young from a technology standpoint. And being that it's money, being that its whole sole purpose is to be money, it's priced from inception, and we are still in that discovery mode of price. So forget everything else. Bitcoin is on the path higher to finding that ultimate sort of valuation, And these correlations only serve to complicate what should not be a very complicated view of where Bitcoin is going. All right, selling out, getting out. I get this question a lot. I don't know just yet. Hasn't reached my targets. Hasn't reached the timing band. Hasn't reached the time frame. Haven't seen a massive mania blow off top. Nothing close. We had a little bit of a taste of that in January. And we've cooled off all these. We've corrected a couple times, and that's good. It's good that we saw a 30% decline in January and a 25% decline in February. That is the type of sentiment, short-term sentiment resets that we need to keep the bull market sustainable. We need to keep this rally contained enough where it doesn't blow off and induce a top on the 4-year cycle. So in terms of when am I selling, again, I don't have the specific answer. Again, they're not arbitrary numbers. I don't want to see Bitcoin extend and overachieve in this 4-year cycle and then me get out at an arbitrary number in the future. The goal of the 4-year cycle really is an attempt to get out of positions or get out of most of our positions near the top of the 4-year cycle. That's not a specific number. It's a timing decision. It's a decision based on being able to identify near the area where we expect in a cycle for the market to top and being able to take some money off the table. Now, people ask me all the time, if Bitcoin's going to $500 or $1 million over the next, let's call it 5 years or 6 years, why are you getting out? Well, I'm getting out because I want more Bitcoin. I'm an investor first. I invest in all asset classes, and I continue to invest in all asset classes, even though I believe Bitcoin will outperform those other asset classes. I value where I am in this point in my life, and I focus on risk. So I like to be invested in other asset classes. But as an investor, I refuse to sit through a 80% decline in the value of my investment, especially when I really confidently believe that we will see another significant decline. People point out that if you hodled through the 2017 to 19 decline, that you've now doubled your money since then. Yeah, of course you have. But you know what? I got out at 20,000. You see the tweets in real time. And I got in at 3,700 or so. So I want to try and replicate that type of thing again in the future. Will it be perfect? Probably not. There was a decent sized position that I sold in 2017 around the $10,000 to $12,000 range as well, thinking that may have been a top. It was 4 weeks too early, and as you can see, 4 weeks towards the end of a bull market can make a significant difference. But even selling at 12,000 and buying back in at 4 was a very impactful decision to make. So there's a chance now in this upcoming bull market top that selling 4 weeks too early, right, may look like a really bad decision. So maybe selling something at 160,000 and then seeing it go to 300,000. That would look like a pretty poor decision to make. But then again, if we're looking for a move back down towards 50 or 60,000 by the end of the next 4-year cycle, it may not be so bad after all. Well, what if the 4-year cycle low doesn't happen? And that is also a possibility. It's a possibility that the next decline, maybe I'm wrong on that, right? Maybe we get a 30 or 40% decline and that's it. And that's always a risk. So if you sell some at the top, if you sell most of it at the top and it pulls back, what guarantee do you have that it will decline? And there is no guarantee. There's no guarantee in investing at all. But I'm at the point now, and this may not be the same case for you, but I'm at the point where if I do sell near a top, it's more than life changing. It's more than being set. and I will hold, regardless of the 4-year cycle low, I will hold 25% of the 4-year model through the next 4-year cycle decline for insurance for the upside possibility, insurance that there is no major decline into a 4-year cycle low. Maybe there's a consolidation over time with a small decline to maybe say 45%, not giving or affording me the ability to get in at what looks like a 4-year cycle low before Bitcoin continues. If that were to happen, then it's not the end of the world holding 25% of the position that was bought at $4,000 and seeing Bitcoin go to 400,000 and above. It's not the end of the world. So I would be content with that possibility. But again, I'm not going to sit here and ride an 80% or a 70% decline into the next 4-year cycle. It's almost the same as predicting or starting this journey 2 years ago with the goal of Bitcoin 200,000, selling out at 50 and not seeing through to the end. The declining phase of the 4-year cycle is something I see as well happening in the future. So again, I'm not going to sit there and say I really believe we're going to see a significant decline to the 4-year cycle low and not take action to avert that possibility. So that's something I definitely will be looking to do. But again, we're not there yet. There's still time before that. We still need to focus on the plan of being able to get to that goal of 150 and above, or the top of this cycle. And it's not going to be clean, it's not going to be pretty, it's not going to be perfect, but getting out as much as possible at that top or near that top is the goal. And that's always been the goal from this journey. Lastly, what happens after this cycle? Well, it's too early to talk about this. It's too early to see, because a lot of what you expect to see in the next 4-year cycle is predicated on what happens in the prior cycle. So that's a lot of what this cycle analysis is all about, is what's happened in prior cycles. So we need to see how this cycle closes out, or at least tops and declines, before being able to make any real sort of provide educated analysis on what the next cycle may bring. I think we're going to be looking for more price discovery early in the next 4-year cycle, so another big rally. But I think we could be looking at the possibility of a longer and larger sort of bear market in the next 4-year cycle, and that's something I'm going to save for a video to come. So I want to this video's gone on for 45 minutes. I want to start to wrap this up. Again, not much has changed in all the videos I've produced over the last 2 years. If you've enjoyed this video, go back and watch some of the other ones. They talk a lot about psychology and your emotions. That again is where this is going to be made or lost for you, in how you execute on your plan and the decisions that you make all the way up to the top. It's not going to get easier. Like I said, if we're going to have $10,000 up days and $20,000 up and down days, it's not going to get easy. And we're talking about bigger profits, bigger paper open profits. It's going to be hard to navigate that. Look at the last 4-year cycle at the end. Let me see if I can bring that up. All right, here it is right here. Last 4 weeks. This is a weekly, from 7,700 to 20,000. 13,000 of that gain was made in the last 4 weeks. If we peak at 300,000 in this cycle, we may get $150,000 move in the last 4 weeks of this cycle. Think about that. $150,000 move potentially can come in the last 4 weeks. In that 4 weeks, you may get 20% declines. You may get $20,000, $30,000 declines. It's not going to be easy. It's not going to be easy at all. But it's not going to be easy if you're not prepared and have the right mindset and approach it with the plan that you have. But finally, here's the quarterly chart. This is the time frame you care about. This takes out all the noise, takes out all the wicks, and the quarterly is telling us that we're now getting into the final stretch of the 4-year cycle. We've exceeded the all-time highs. We're firmly above the 10 quarterly moving average, and now we're heading up towards the top. Again, no guarantees on where that happens. 150, 350, maybe even 400 plus. We don't know. Let's hope we can be there. The goal is that you have as much of your position intact and ready to exit when the time comes. Thanks again for following. Wish you all the best. Good luck to you, and take care.